It's the weekend. Touch grass. Right. So early on when I started forex trading, I was the trader who was jumping from strategy to strategy. I can remember within the first year of my trading career, I should say, I was trading chart patterns. I used to trade head and shoulder patterns, double tops and double bottoms. Then the following year, my cousin Wale introduced me to trend line strategy. First touch, second touch, the third touch is where the magic happens. Well, it didn't work out for me. The following year, I chanced upon ICT. Now, this was the new group people were rushing in for. ICT, SMC, they were the smart traders, and I wanted to be one. So I went on to these videos and I started learning. Now, guess what? It also didn't work for me. But then I came to realize something, that it wasn't that the strategies weren't working. Of course, it was working for so many other people. But why wasn't it working for me? I realized that I didn't have the framework. There was no proper understanding of how it really worked. All I wanted was profit. So today in this video, what I'm going to be doing is I'm going to break down the framework behind my trading model. Now, I'm not going to reveal every detail because a strategy is more than just entry rules. Yes, so my model is built around three things. And I kind of mentioned this in my previous video. And by the way, if you haven't watched my previous video, do well to check it out. I'll leave a link to it in the description down below. Now, back to the video. So these three things are market structure, liquidity, and confirmation. So now about structure. When I open the chart, the first question I ask myself is, what is price doing? Where is price heading to? That basically defines what market structure is. It tells you the direction of price. Now, let's look at this simple analogy. If you live at La Paz and you want, let's say, a fine bread, and you think maybe Accra Mall has a bread, then you go to the station, you board your car, you go to Accra Mall and go get your bread. What happened basically here is there was a bias. Then you went on with a direction. The bias was you needed a bread, then you follow the direction to go get the bread. Now, it's different in forex trading. I've come to realize you need the direction before you build a bias around the direction because you don't move the market. You understand? So, first thing you need to do is where is price heading towards to? What is price directing at? What is price reaching out to grab? Then you build your bias around that particular structure. So nobody wakes up one day and says, today I'm going to be buying or today I'm going to be selling. Because nobody knows the direction of price unless you open the chart. Then you understand, okay, this is the direction that price is going at. Then you form your bias around it. So that's why market structure forms a very core pillar when it comes to the framework of my trading model. Now about liquidity, because liquidity is money, I try as much as possible not to put my stop loss at areas where they are too obvious. So what I try to do is I try to identify points of interest, what people call POIs or key levels, or I just look at areas where liquidity is likely to settle at. So that's what I try to do. Now confirmation. This is the stage where my trading model becomes very specific. Now I'm not going to be sharing any details with you here, but this is where I also decide whether the trade is worth taking or not. Now that I've shown you the section A of my thought process, the framework behind my trading model, please let's go and do the section B. Let's go and do the practical side. Let's hop into the chat. Let's see how it truly works. Okay, so before we get into the details, let me offer a quick disclaimer here. Obviously, this is a cherry-picked chart. I just need to show the practicality of the framework I shared with you guys earlier. Okay, now let's get to business. Now, what you realize here is after price made this high, it started to go down. Okay, so what you observe here is market structure happening in real time. As I mentioned earlier, when I open the chart, the first question I ask myself is, where is price heading towards? What's the direction of price? So with this cherry pick chart, for instance, you realize that price, after it made this high, started to tank down. It was making a series of lower lows and lower highs, lower lows and lower highs, lower lows and lower highs. So what I then tried to do is I map out those lower lows and lower highs just so I get a proper understanding of where price is heading toward. So my lower high, lower low somewhere here, lower high, lower low, lower high, lower low, lower high, lower low, lower high, and lower low. So this is what price was printing. So what I try to do next is I map out the last low and call it break of structure. Same for the one that came prior to that one, and call it break of structure 2. So let me clean this one so everything gets clear, and call that one to break of structure. Remember I spoke about liquidity. Yes, so this right here was liquidity. This right here is liquidity. This where price will try to grab some money before heading into its direction, which is continue the bearish move. And this right here is my termination area. This is where my point of interest is. So let me name this termination area. That's my termination area, and my point of interest lies somewhere around here, somewhere within my termination area. That's my point of interest. So basically I'm saying that if price comes within this range, I'm going to try and sell. But then I have to see something first before I try and sell. That's where confirmation comes in. So basically this is what I look out for and try to short price from here, because you realize that the structure of market was given a bearish momentum. Then try to short all the way to this point. Now I'm going to show you something, because I actually took this trade, but I didn't hold fully because it was a Friday, and one of my risk management rules says that I am not supposed to hold trades beyond the weekend. So on a Friday, I just close my trade and exit, take my wins or losses. Or if any trade has not been entered yet, I just sit on the sidelines and let price do its own thing. So this is it. There's a confirmation that I look out for before entry, but then in general, this is just how the framework works. This is how the model of the framework works. So you identify the structure of price first, and that's what I do. I identify the structure of price first, and I look for liquidity. As you can see, price came to grab this liquidity, then it came on here, came to grab more liquidity. If I'm going with you, and I will get to the other side. Sinking in, I know this feels right. Catching a breeze, love moving through me like a wildfire. What next we do is we wait for our confirmation within this points of interest, then we take that trade and we ride a trade all the way to the next low. So this sums up the framework of my trading model.